you so much, Prasad, and greetings to all from Bangkok. It is my pleasure and my honor today to join you to speak at this event that's been organized by AICB. So I very much appreciate the invitation. So I will start my presentation. What I will cover today will be the following. I think it's useful to start with a little bit of context setting about the risks and the opportunities that we're talking about when it comes to sustainable finance. Then we will look into the role of the financial sector into the implementation of the Paris Agreement. We will cover a little bit of the global context, but we'll spend most of our time looking at the situation in the ASEAN economies for sustainable finance. So to get us started, this is a sort of a, starting with the risks. I mean, it is not time wasted to really underscore the risks that we're talking about in action. And so here you see sort of the risks as we lay them out in the World Bank when we look at what happens if nothing's done. And there is really a business case to be made here. We see that there's a missed opportunities for economic gains if countries do not invest in low carbon innovation and production. We also anticipate a disruption in exports should there not be sort of the implementation of the net zero commitments. Stranded assets in the fossil fuel industry is another topic that I'd like to introduce here when talking about the risks. Business migration, where countries that will be actually implementing further the Paris agreements may actually find opportunities, while others will see some FDI basically and business flowing out. And finally, there are true risks in sort of the rise of structural unemployment. So we're talking here about climate change impacting our livelihood, but also really the competitiveness of our economies and the sustainability of our firms. Now, next is to look also at the business opportunities, because it's not all dark, in fact. If we look at the sort of opportunities, the World Bank produced a report in 2019 that is called the Lifelines Report. And that's looking at the fact that the extra cost of building resilience into infrastructure systems would really, measure around 3% of the overall investment needs. At the same time, we calculated that the overall net benefit of investing in the resilience of infrastructure in developing countries would be $4 for each dollar invested. So really, we talk here about many opportunities, and those opportunities can be found around 5 key systems that really account for over 90% of global greenhouse gas emissions. And you see them here: energy, agriculture, food and land use, cities and urban infrastructure, transport, and manufacturing. So we're really looking at the entire sort of economic system that would benefit from more investments into resilient infrastructure, resilient production. So moving on, just to put in context where the financial sector fits when it comes to supporting the Paris Agreement. So I'd like to go back to Article 2.1c of the Paris Agreement, which refers to making finance flows consistent with a pathway towards low greenhouse gas emissions and climate resilient development. So that's really sort of the role here that's been laid out formally in the Paris Agreement. And how will the financial sector enable green and resilient growth? Well, first of all, by mobilizing capital towards sustainable activities, by fostering transparency and decision-making in the economy, by providing climate and disaster risk finance instruments, and we'll talk a bit more about this later, and by managing physical and transition climate risk in financial systems. So really the financial sector has a broad role to play, for in fact reaching these goals. To elaborate a little bit on the World Bank's approach to sustainable finance, I'd like to introduce to you the Green, Resilient and Inclusive Development Framework of the World Bank Group. This is the GRID framework. And this is a way for the World Bank to look at really mainstreaming climate into everything we do and into the twin goals of, eradicating extreme poverty and reaching shared prosperity. So really, we're taking an approach in support of our client countries to really have green embedded in everything we do in pursuit of our twin goals. So what will that mean for the work that the development work moving forward? So one is really aligning climate and development. So we are really investing in climate risk diagnostics, of course, alignments with the Paris Agreement, and I've talked about this already, and measuring climate finance and impact, working with our client countries to develop their capacity in measuring risks and measuring opportunities. So that's the first. Secondly, prioritizing the system transition that is required. And that's really across the spectrum of the sort of 5 key systems that I talked about earlier. And finally, increasing finance for the transition. And what will be required, the enabler for this will be greening the financial sector. And I'll say more about this later, as well as mobilizing capital at scale towards climate-informed activities. Now, this is just to, put in one slide who are the main actors in sustainable finance. So, it will take many to tango. So there are the policy-making bodies and regulators who are absolutely critical for actually enabling these innovations that we expect to see on the climate front. That will be the policymakers, so ministries and government agencies, but also, of course, the supervisors. Then we have the financial sector, and it's not only the banks, it's the financial intermediaries more generally, the insurers, the investors. Of course, we have the private sector where a lot of the innovations will be coming from. So corporations, sectoral associations, small and large firms alike. And finally, the NGOs, charities and foundations, and all these actors that also work on advocacy to actually move to a sort of a climate-informed operational model of the world. So moving forward from intention to implementation. So here, this is just to show a little bit more or elaborate on what is it going to take for sustainable finance to play the role that is expected. So one is, there is a need for an alignment of sustainable national policies and initiatives with the Global Development Agenda of 2030. And that means, mainstreaming climate in all of the sort of sustainability goals and targets that the world has set for itself. That, of course, includes the SDGs, but it goes beyond that. So that's number one. Number two, the development of regulatory incentives and enabling regulatory and institutional environments. So there are some actually good examples and good practices which also come from our region, which we will have a chance to talk about later. Number three, a greater integration of sustainable development goals with the national macroeconomic policies. So this is not only the job of ministries of infrastructure and urban, the ministries of finance very much need to embed these climate goals into their budget making and macroeconomic policies. Number four, the development of sustainable financial markets and instruments, where we see a role for both the government and the financial sector. Number five, the development and implementation of national sustainable and green taxonomies. another area where we see a lot of good examples in our region. And finally, the development and the diversification of the investor base for responsible investments. Now, this will conclude the part which is really about the global context setting, which I thought was very important as we then talk about the situation in Southeast Asia. And this slide gives a little bit of a sort of a map of what we're seeing as sort of, new engagements around greening financial systems. So very much, around policy and regulatory frameworks, as I mentioned, also working on standards for disclosure and reporting, a diversified product mix with markets and investors that perhaps are new, and finally impact reporting. And so this will now be my time to actually go into what the situation in ASEAN. And first of all, perhaps we can do a little bit of a stock taking on what's happening in green finance in ASEAN countries. So you see here a number of instruments, guidelines, policies, regulations that have actually been set up in the ASEAN countries. First of all, in Southeast Asia, we're really seeing, and just like in the rest of the world, an increasing demand for sustainable finance and investment. And the past 5 years in particular has seen a lot of new products and new regulatory reforms in this area. So if we look at instruments, green bonds issuance has seen steady growth. There is still a very big difference between green bond issuance volumes in emerging economies compared to the developed economies. But that said, when you look at the numbers, Southeast Asia leads the pack among the, let's say, non-China emerging economies. So there's increased awareness of business opportunities among investors and issuers for green bonds issuance. So that's the first. I'll just mention that at the regional level, the ASEAN Capital Markets Forum has issued guidelines and standards for green bonds, as well as social bonds and sustainable bonds, and sustainable and responsible investment to facilitate the coordination on policies and incentives among regulatory authorities to foster and promote such instruments. So that's one. So I mentioned the new bonds and the new bond standards that we're seeing, these guidelines from ASEAN, which actually also expand beyond the sort of capital markets into also guidelines from promoting responsible investment in food, agriculture, and forestry. If I may single out a few initiatives which I think are really worth putting on the table here to set the stage for the discussion that will ensue. In East Asia Pacific, we have 3 Singapore banks, the DBS, OCBC, and UOB, that have stopped financing altogether coal-powered plants, while other local investors are starting to invest in renewable energy projects. And we're seeing this in Malaysia, Indonesia, Myanmar, the Philippines, and Thailand. And there is actually a good pipeline for investments. Back to Singapore, where the Stock Exchange of Singapore, as well as Bursa Malaysia, have mandated that from 2018, sustainable reporting among listed companies will be required. So listed companies actually do report their ESG. And there have been ESG indices that have been introduced. So what we're seeing here is that Southeast Asia is really beginning to view sustainable finance as a business opportunity. And that's a very promising trend for the future, and one that should certainly be encouraged by government and regulators. So moving on. So I already spoke a little bit about green bonds that we have seen being issued. So this is just to give you a sense of numbers. So what are we looking at in terms of the volumes? Well, by end 2020, the ASEAN sustainability bond issuances had been valued at 7.5 billion with US dollars, with 3.8 billion using ASEAN green bond label, and 3 billion labeled as ASEAN Sustainability Bond. We've also seen, and this is really worth noting, we saw in 2018 the first sovereign green sustainability sukuk issuance in Indonesia. And then the first, it happened a year after the first corporate Greek sukuk issuance in Malaysia was issued, which was in 2017. We are working with governments all throughout the region on sort of further sovereign issuances. So there's definitely a movement here, not only on the corporate side, but also on the sovereign side. Now, we thought that it'd be useful to give you some concrete examples of what's how have assessments and analysis changed that actually embed climate risk. So here is an example of a sort of an assessment that the World Bank does, which is called the Financial Sector Assessment Program, which actually is a joint World Bank IMF assessment, where we've basically started to introduce modules that look at measuring climate risks. Now, that is really essential to be able to measure climate risks in order to actually start looking at ways to protect countries and insulate population against these risks. So in 2019, the World Bank piloted a module on climate risks and opportunities in the Philippines Financial Sector Assessment Program, which again, as I mentioned, was joint assessment with the International Monetary Fund. And the findings of this assessment allowed the regulator and the policymaker to really move forward with some reforms. So as a result of this assessment, there are green regulations for banks and investors, as well as a green taxonomy that is actually in the works. And there are all kinds of other sort of technical assistance support that the World Bank and other development partners are providing to both the government of the Philippines as well as the regulators to embed climate risk assessment into greening the financial sector. So that is one example. And by the way, the Philippines climate risk module was really among the first such modules in the world. So I would actually say that there had been only 2 other countries for which these assessments have been done. So we can be proud that in Southeast Asia, we're actually sort of at the frontier when it comes to emerging economies. So we find as the World Bank that these assessments are really critical in helping the supervisors understand better how to actually protect and for the risks, and also incentivize sort of new instruments. Another example which I would like to give, which is also really important, is the development of green taxonomies. So what do we mean by that? Well, a taxonomy is a classification of environmentally sustainable economic activities to serve as a mandatory or voluntary guideline for green financing. So it addresses some of the sort of ambiguities that one may find when actually not necessarily having a proper definition for green. And that's really a key tool for policymakers and for regulators to clarify the sort of enabling environment for sort of green instruments. So there in Southeast Asia, first of all, ASEAN is about to issue a sort of a green taxonomy. And we're working with several countries on green taxonomies. So Malaysia, but also Philippines, Indonesia, and Thailand, among others. Now, I want to just quickly talk about the market-based solutions, which of course are going to be critical. And I mentioned already the volume of these bonds. So I thought it would be just useful to kind of put on here as a beginning of this this discussion, the fact that we have seen green bonds issuances both on the sovereign side and also on the corporate side. So I will pass, being mindful of the time, I will pass quickly, but I hope that we can make these slides available after this event. There is also movement in supporting institutional investors. So here we give the example of the GPF of Thailand, where we're working actually very closely with the GPF for integrating a sustainable investment strategy via a sort of a methodology that is being developed for sort of embedding climate risk, but also ESG principles more generally into sort of investment strategies. So that's another example. And finally, my final example will actually be on sustainable activities in the insurance sectors. So that one is really perhaps a more recent shift that we are seeing in ASEAN economies, where the sort of topics of sort of greening the insurance sector is starting to be of more focus. But again, this is really looking not only to the past, but to the future. Talking about the future, looking forward, what do we expect are going to be sort of key trends in sustainable finance for our Southeast Asian economies? So we expect that, there will be more and more promoting of innovative, sustainable financing solutions and instruments by the private sector. It's really going to be the private sector that's going to find these new instruments that will help manage climate risks and opportunities, particularly as the business case gets more and more to the forefront. So governments, can play a huge role. At the end of the day, it will be the sort of businesses that will really move the needle and allow to sort of ensure that climate goals are respected. Now, the COVID-19 pandemic has both been a catastrophe for the world, as well as to some extent an opportunity. So in a sense, because it's really sort of shaken up the traditional models of development, there is an opportunity to embed climate into the recovery from the COVID-19 pandemic. And in fact, the grid framework that the World Bank Group has just launched goes completely in this spirit. So perhaps this is the perfect timing to support the transition from brown to green. And also there would be really huge costs if the sort of COVID-19 recovery was focusing on brown in the interest of time. So that is something to put on the table here. Second, the mainstreaming of green financing in fiscal policy and in the financial system is a key enabler. And I talked about budget before and fiscal, but it's not only in fiscal management, it's also in public procurement, green trade, credit, equity, insurance, and institutional investors. At the sort of national and the regional levels, the one will need to identify those potential environmental and social friendly projects. And that will require the coordination, quite a bit of coordination among the stakeholders whom I described earlier. So among the policymakers, but also, of course, the regulators and the enforcement agencies. Regulatory incentives for green projects is something that we're seeing more and more. One case in point, which actually I'm borrowing from the Europe model, but we're seeing that for COVID-19 recovery, there's been quite a bit of incentives for green that have been embedded. And perhaps that is something that our governments in Southeast Asia could be thinking about more as the COVID-19 recovery is sort of, hopefully, as we get to the recovery stage. Promoting impact reporting and disclosure to existing issuers, that we know is absolutely critical. And we've seen, a lot of movement here in countries like China. Hopefully that will inspire others as well in the region. And finally, awareness raising on sustainable finance among all stakeholders and the nurturing of impact investors in the region. So that's what we hope the future will look like. Now, in conclusion, there are many efforts that are underway in the international financial sector to really take these social and environmental aspects in the ASEAN region, to a global scale. This trend will continue to grow. There is no way back, as more governments move to green their economies, focus on committing to climate change agendas, and more regulators require institutions to disclose sustainable finance initiatives and climate-related risks. Now, ASEAN is in a good standing. Most ASEAN countries have developed the necessary building blocks for a sustainable finance system in the past 5 years. This now is the time for taking actions, for implementing and really scaling up. And of course, my last words will be that the World Bank stands ready, and I would say the World Bank Group, to provide our continued support to our clients in this region in achieving their sustainable development goals. Thank you very much.